Have you ever wondered why a billionaire would rather spend $50 million on a canvas that looks like someone spilled paint on it, instead of, buying stocks or real estate like a normal person? I'm talking about art that you or I might walk past in a thrift store. But somehow, when it hangs in a billionaire's mansion, it's considered genius, a cultural treasure, an investment. Here's what nobody tells you about this. These ultra-wealthy people aren't being pretentious. They're not trying to look sophisticated. They're playing an entirely different financial game that most of us don't even know exists. And understanding this game, it reveals something profound about how wealth actually works at the highest levels. So, here's the thing. When you or I think about investing, we think about stocks, bonds, maybe some real estate if we're doing well. We think about diversification. We think about returns. But when you have hundreds of millions or billions of dollars, those traditional investments start to create problems that regular people never have to think about. Serious problems that can actually cost you massive amounts of money. Let me paint you a picture. Imagine you have $500 million sitting in your bank account. First of all, congratulations. But second, you've got a nightmare on your hands. You can't just dump all of that into the stock market. If you tried to buy $50 million worth of Apple stock tomorrow, you'd move the market. The price would spike as you're buying. You'd end up paying way more than you intended. And when you eventually want to sell, same problem in reverse. This is called the liquidity curse. The more money you have, the harder it becomes to move it around without losing chunks of it in the process. But here's where art comes in, and this is where things get really interesting. Art exists in a completely different ecosystem than traditional investments. It's not tracked by the IRS the same way. It's not liquid like stocks. It's not regulated like bonds. And most importantly, it has properties that make it incredibly valuable for people trying to protect enormous amounts of wealth. Think of it this way. Stocks are like water. Easy to pour, easy to measure. Everyone can see exactly how much you have. Art is like a rare gemstone. Impossible to value precisely, difficult to track, and its worth depends entirely on who's asking. Now, before we go further, I want to be clear. I'm not saying billionaires are doing anything illegal. Most of what I'm about to explain is completely above board. But it is a system that only works when you're playing with massive amounts of money. And it's a system most people don't even know exists. Let's talk about what I call the valuation vagueness strategy. This is the first big reason billionaires love ugly art. When you own stock, everyone knows exactly what it's worth. Apple is trading at $173 per share. You own 1,000 shares. Your position is worth $173,000. Simple math. Crystal clear. But art? Art is whatever someone says it's worth. And here's the kicker. That someone is often a professional appraiser who has every incentive to value your art piece as high as possible. Let me show you how this works in practice. You buy a piece of contemporary art for $5 million. Ugly stuff. Looks like a child's painting. But it's from a recognized artist in the right galleries. You hold it for 3 years. Now you want to donate it to a museum. But first, you need it appraised. So you hire an appraiser. This appraiser looks at recent sales of similar works. They consider the artist's trajectory, the cultural moment, the market trends. And they determine that your $5 million painting is now worth $15 million, maybe $20 million. Who's going to argue with them? There's no ticker symbol for this painting, no objective market price. Now you donate it, and you get to write off $20 million on your taxes. You paid $5 million, held it for a few years, and got a $20 million tax deduction. That's a $15 million gain that was never taxed as income or capital gains. This isn't hypothetical. This happens constantly, and it's perfectly legal as long as the appraisal is reasonable by art market standards. Which, let's be honest, is a pretty flexible definition. But wait, it gets better. Let me introduce you to the storage loophole. Here's something wild. In many jurisdictions, you don't have to pay taxes on assets that are in transit or in storage. And art can be in transit or in storage for decades. There are massive warehouses near airports in Switzerland, Luxembourg, and Singapore. These places are called free ports, and they're filled with billions of dollars worth of art that technically belongs to people all over the world. Why? Because as long as that art stays in the free port, it never officially enters any country, which means no import taxes, no sales taxes, No wealth taxes in countries that have them. It's in a kind of financial limbo. You can buy a painting in New York, immediately ship it to a free port in Geneva, and as far as tax authorities are concerned, that transaction might as well have happened in outer space. You own it. You can sell it to someone else while it's still sitting in that climate-controlled warehouse, but you never pay certain types of taxes on it. And here's the brilliant part. You can visit your art. These free ports have viewing rooms. You can fly to Switzerland, look at your painting for a few hours, and fly home. You get all the ownership benefits with almost none of the tax obligations. Try doing that with stocks or real estate. You can't. Those assets are always firmly planted in some jurisdiction with its hand out for tax money. Now here's the third reason, and this one might actually blow your mind. I call it the collateral conversion game. Banks will give you loans using your art as collateral. And this is where things get truly sophisticated. Let's say you own a painting appraised at $30 million. You go to a private bank, one that caters to ultra-wealthy clients, and you say, "I'd like a loan using this painting as collateral." The bank says, "Sure, we'll loan you $20 million at a very low interest rate." Why low? Because they're holding a $30 million asset as security. They're happy with the risk. Now here's what just happened. You extracted $20 million in cash from an asset without selling it, which means no capital gains taxes. You're not selling anything. You're just borrowing against it. But it gets even better. That loan? The interest on it might be tax deductible depending on how you structure it, and you still own the painting. If it appreciates to $50 million in 5 years, you still get all of that upside. Meanwhile, the $20 million you borrowed can be invested in other things. Real estate, private equity, more art, anything that generates returns higher than your loan interest rate. This is how billionaires can live lavish lifestyles without ever technically having taxable income. They're not selling assets, they're borrowing against them. And when they die, there are estate planning strategies that can reset the cost basis on everything, potentially wiping out decades of unrealized gains. You cannot do this with most other assets at this scale and with this much flexibility. But art? Art is perfect for this strategy. Now let me tell you about the fourth reason. The privacy shield. Stock ownership is relatively public information. If you own more than 5% of a public company, you have to disclose it. Real estate transactions are public record in most places. Even cryptocurrency, despite its reputation, leaves a blockchain trail. But art purchases? Completely private. You can buy a $100 million painting through a shell company registered in Delaware, and nobody needs to know it's you. The gallery knows. The seller knows. Your banker knows. But the public? They have no idea. This matters more than you might think. When you're extremely wealthy, privacy isn't just about ego. It's about security. It's about negotiation leverage. It's about keeping your financial strategies hidden from competitors and regulators. If everyone knows you just sold $50 million in Tesla stock, they might wonder why. Are you losing faith in the company? Do you know something they don't? Your single transaction could move markets and cost you money on your remaining positions. But if you quietly sell a painting to another billionaire for $50 million? Nobody knows. Nobody cares. No market impact. No questions asked. Art is the original privacy coin. It's been working this way for centuries, long before cryptocurrency was even imagined. Here's the fifth reason, and this one reveals something darker about how wealth preservation actually works. I call it the jurisdiction juggling strategy. Art is portable in ways that other massive assets aren't. You can't pick up a shopping mall and move it to another country. You can't relocate your stock portfolio to avoid regulations without major tax implications. But a painting? A sculpture? That fits in a crate and can be on a plane to anywhere in the world within 24 hours. This gives ultra-wealthy individuals incredible flexibility. If regulations in one country become unfavorable, their art collection can be moved. If tax laws change, the art relocates. If political instability threatens, the art is gone before anyone notices. And remember those free ports I mentioned? They're specifically designed to make this kind of movement easy and tax efficient. Your art can hopscotch around the world, always staying one step ahead of whatever regulations might threaten it. This isn't paranoia. This is standard wealth management at the highest levels. When you have generational wealth to protect, you think in terms of decades and centuries. You plan for political upheaval, Regulatory changes, currency collapses. Art has survived every empire, every revolution, every economic system humanity has created. It's one of the oldest forms of portable wealth, and it still works today, maybe better than ever. But here's what nobody wants to admit. And this is the deep truth underneath all of these strategies. The reason billionaires buy ugly art isn't really about the art at all. It's about the system that exists around the art. A system that was built over centuries by wealthy people to move, hide, and protect money in ways that regular investments don't allow. The art itself? It's almost beside the point. It could be beautiful. It could be ugly. It could be a banana duct taped to a wall, which, yes, actually sold for $120,000. What matters is that it exists in this unique financial ecosystem where value is subjective, transactions are private, storage is tax-advantaged, and movement is unrestricted. Think about it this way. If you wanted to design the perfect asset for wealth preservation, what would it be? It would be something with subjective value that experts could appraise flexibly. It would be something portable that could cross borders easily. It would be something that could be stored indefinitely without triggering taxes. It would be something you could borrow against without selling. It would be something with a private transaction history. You'd basically design art. Or rather, art and the system around it has evolved to be exactly this. Let me tell you about Marcus. He's a tech entrepreneur who sold his company for $800 million. Suddenly, after years of living modestly while building his startup, Marcus has more money than he knows what to do with. His financial advisor tells him to diversify, buy stocks, bonds, real estate. So Marcus does. He puts $200 million into various stock positions, $50 million into bonds, another $100 million into real estate. But here's what Marcus doesn't realize. He's now locked into very visible, very regulated investments. Every quarter, he gets statements showing exactly what everything is worth. Every sale triggers capital gains taxes. Every dividend gets taxed as income. More importantly, Marcus has lost flexibility. If he needs to move money quickly, he has to sell stocks, which is public and creates tax events. If he wants to buy something expensive, he has to liquidate positions, and every move he makes is visible to investors, competitors, and regulators. Marcus is wealthy, sure, but he's playing the same game as everyone else, just with more zeros. Now let me tell you about Chen. She also sold her company, also for around $800 million. But Chen has different advisors who understand the art game. Chen puts some money in traditional investments, sure, but she also spends $150 million on contemporary art over 3 years. She buys pieces from established artists through the right galleries, not because she loves the art, though maybe she does, but because she's building a portfolio that operates by different rules. 5 years later, Chen needs cash for a new business venture. She doesn't sell stocks. She takes her art to a private bank and secures a $75 million loan at 3% interest. No capital gains taxes, no public transaction, just cash in her account. Meanwhile, the art she donated to museums over those 5 years? Appraised generously, giving her massive tax deductions that offset the income from her successful investments. When Chen wants to move wealth to her children, she doesn't write them checks that trigger gift taxes. She sells them art at discounted valuations. The family now owns assets that can appreciate dramatically while remaining under the radar. Chen's wealth isn't just preserved, it's optimized, hidden, and growing in ways that Marcus's wealth never could. The difference wasn't about being smarter. It wasn't about loving art more. It was about understanding that at extreme levels of wealth, the game changes entirely. Here's what most people don't realize about wealth. There's a point where it stops being about making more money and starts being entirely about protecting what you have. When you have $10,000, you think about growth. How do I turn this into $20,000? When you have $1 million, you think about investment. How do I generate good returns safely? But when you have hundreds of millions or billions, your entire mindset shifts. You're not trying to get richer. You're trying not to get poorer. You're trying to keep your wealth away from taxes, away from inflation, away from political changes, away from anything that might diminish it. And this is where ugly art becomes beautiful. Not aesthetically, financially. Art is one of the few asset classes that gives you maximum flexibility with minimum transparency. It's the Swiss Army knife of wealth preservation. And the fact that regular people look at a $50 million painting and think, "That's ridiculous, I could paint that," is actually part of what makes it work. The confusion around art's value is a feature, not a bug. The more unclear it is why something costs $50 million, the more flexibility you have in how you value it, move it, and use it. This is why you see billionaires at art auctions, not because they're all secretly passionate about contemporary art, but because they understand that the auction house, the gallery, the Freeport, the appraiser, the private bank are all part of an ecosystem designed to help them do with their wealth what they cannot easily do any other way. Now, does this mean regular people should buy art as an investment? Absolutely not. This strategy only works at massive scale with access to private banks, specialized advisors, and the ability to hold assets for decades. For most of us, buying expensive art would be financial suicide. We don't have the connections to sell it later. We don't have access to the loans that make it work as collateral. We don't have the tax situation that makes the appraisal games worthwhile. This is exclusively a game for people who have more money than they can efficiently invest through traditional means. It's a wealth preservation strategy, not a wealth building strategy. But understanding it teaches us something crucial about how money works at the highest levels. The rules are different, the strategies are different, and the assets themselves serve completely different purposes. When a billionaire buys ugly art, they're not buying art. They're buying flexibility, privacy, tax efficiency, and portable wealth. The fact that it happens to be a painting is almost incidental. This is what people mean when they say the wealthy play by different rules. These aren't illegal rules, but they are rules that only activate when you have a certain amount of money. Below that threshold, these strategies don't work. Above it, they're some of the most powerful tools available. So the next time you see a headline about some ridiculous painting selling for tens of millions of dollars, don't just shake your head at the absurdity. Look deeper. Ask what that transaction really represents. Ask who benefits and how. Because that ugly painting isn't just art. It's a chess piece in a game most of us didn't even know was being played. A game where the wealthy aren't trying to get wealthier, they're trying to stay wealthy. And they've figured out that sometimes the best way to hide a fortune is to hang it on a wall and call it culture. The people who understand this aren't smarter than you. They just have access to a parallel financial system that operates by different physics. A system where value is negotiable, transactions are invisible, and a canvas with some paint on it can be more valuable than a portfolio of blue-chip stocks. Not because the art is better, but because the system around it is designed to do things the stock market simply cannot.